to this awesome interview. Well, I think it's going to be an awesome interview because I have an amazing guest with me. Carl, you have actually been on the show. We've had a couple of chats before, in particular, one chat where we spoke about dad entrepreneurs. Is that the way that you say it?
Dadpreneurs, yeah, dad entrepreneurs.
Dadpreneurs, okay. It's a real tongue twister, that one. So Carl's been on the show before and asked him to come back and talk about his journey in commercial real estate. So Carl, welcome to the show. Thank you for joining me.
It's a pleasure to be here, Mish. I'm excited to share a bit of my journey.
Yeah, and I'm excited to hear about your journey. So we're going to be talking about your journey in real estate per se, because you've been doing this for quite a long time and you started out, did you start out in residential? How did you start out? Tell us your story about how you started out.
So I've been in wealth creation since I got obsessed with wealth creation at about 15 years old, maybe even a little bit before that. But like, that's when I started reading books and, I can't remember, I think it was Roy McDonald's How to Turn $1 into $1 million in 7 years or less was one of the first personal development wealth creation books I ever bought as a kid. And so I've been obsessed with wealth creation for a long period of time for various reasons. And my vehicle of choice for most of my life has been business, right? I've run my own business since I was 15 years old. I've had multiple businesses. I've sold businesses. I've bought businesses. And I was very anti-property, especially in Australia.
Wow.
One of the books that I had influenced me at a young age was, Rich Dad, Poor Dad, Robert Kiyosaki. And I'm a big fan of the board game, Cash Flow. For anyone who's never played it, it's great. But that reinforced to me that the Australian property market just looked stupid to me. It looked like a crazy bubble. Everything, like, it just didn't make sense financially because we have this negative gearing thing. Most people are actually losing money on their properties, like all on the hope of the speculation of the growth. And I'm here going like, no, I want cash flow and I'm focused on cash flow. And so I stayed away from property for a long time. I, like the general normies would see the headlines when I was a lot younger about property prices and go, yeah, it's crazy. It's gonna pop. I can still remember, I think maybe around 2000 and maybe 2009-ish, being like, oh, property prices, they're crazy, they're overinflated. And of course, it's only continued to rise from there.
Yeah.
So I'm fairly new to the property game. And what I did everything else. I did shares, I did business. Like even before I properly really made a lot of money in business, I was already investing in shares, and that just seemed simple and made sense to me because it was still business.
Oh.
I even made money in crypto long before I made money in property. And so what actually got me to finally look at property was 2021, so it wasn't that long ago.
Oh, wow.
And that was my first property purchase, and that was a commercial property, and it was actually commercial property that finally started to make sense. There was a book I read, and when I read this book, I was like, they painted the picture of what could be done with commercial. And I was like, hold on a second, this starts to stack up cash flow wise. This looks more like the game of cash flow. And, this stacks up with what I expect, because before then, I didn't fully comprehend the difference between the Australian system and the US system. And
I was going to ask you, so Robert Kiyosaki obviously is US based, and a lot of the Australian market kind of went towards the Robert Kiyosaki sort of principles. So when you were looking at this back in the 2000s, you couldn't see that blue ocean, let's say, of what he was saying.
Well, because, there's so many things that are different. Like in the US, right, you got fixed mortgages for 30 years, whereas in Australia, you can fix them for like 5 years, right? Like, so the finance system was completely different. So, if you could get in, it made sense. Like they were like, yeah, you could buy a property in the US. Firstly, their values of their properties until recently were quite low. They've recently had a big boom, but their property prices were, you could buy what we would dream of buying in Australia for like $400,000, and they'd be multi-millions over here. And so you'd have your down payments there, and you'd be fixing your interest rate for 30 years. Like it made it easy to make these numbers work. When I look at the Australian market, I'd look at the variable interest rates, even how long you could fix for. In America as well, you can borrow against your share portfolio to be able to buy real estate. You can borrow. The finance system is so different. Whereas in Australia,
yeah,
property is really one of the only main things that banks and lenders will truly lend against. Right. Whereas in the US, you can lend against your life insurance policies. You can like, it's just a completely different financial system. And I didn't understand that until maybe in the last 6 or so years that I've really come to understand that. So I'd been consuming all these American finance books and going, well, this just doesn't make sense. And I just thinking that the system here was broken and real estate was a big Ponzi scheme. And so, and look, I'll be honest, there's still parts of me that would say that there's still things in the system that I think are ridiculous in the Australian system. But once I
agree with you there, 100%. I think there's a lot more flexibility in the real estate market that the Australian market can really take on board. So I 100% agree with you. But it's good to know that you started off in commercial property.
Was the only time that finally made sense to me, because I was like, this is going to generate cash flow. Like, I didn't want to own a property that was taking money out of my pocket. Like, just didn't make sense to me on the hope, right? Because whether you're going to get the capital growth that's huge, it really comes down to how well you buy. And I'd spent decades learning to become good at business. And I was like, I don't want to become an expert at trying to know this is the street and this is the house and all that. I've got friends who love buying real estate, and they'll go to the auctions and they'll go and do all the research and they'll do all that. I have zero interest in becoming a real estate expert. Zero. Like, I want to focus on what I'm good at, and I just want a vehicle that gets me a financial return. And so that's why commercial just made sense. Because firstly, I understand commercial because it is more like business. Like, I think if you're a business owner and you've been a business owner for a long period of time, buying commercial can actually make more sense than residential, because you understand business, you understand the tenants, you understand the way finance is done is different. It's more like it's a business loan effectively. Like, it's just different. Whereas if you're someone who's self-employed, you've not run your own business, there is a bigger learning curve, I think, to becoming a commercial investor. Whereas if you're a business owner, I think that learning curve is smaller. It definitely
smaller. I think you're 100% right there. I mean, when you run your own business, and the reason why commercial is called commercial is because it's everything commercial. It's based, and you hit the nail on the head there. Everything about commercial is very, very different to residential. I always say your lending is different types of lending. It's different types of institutions. And in fact, often your residential lenders don't even know who the commercial lenders are, because none do the two ever meet. So you're 100% right, with regards there. And it's an absolute pleasure working with somebody who understands commercial and business. And I think, you're right. In business, it's that much, that much easier to understand how commercial works at the same time.
Yeah, definitely. So that's kind of what got me into real estate. And then after that, it got me to understand the Australian real estate market better. And then I could see the place for where residential did fit into the piece. And so then I've since acquired residential as well. But I still prefer commercial. Like, I'm the only thing that I find challenging about commercial versus residential is getting those initial deposits, right? Like, it takes longer to accumulate to get to the size of deals that I'd like to be playing in on the commercial space, requires more deposit. And so therefore you can buy residentials with less money in initially, you potentially get the capital growth and then come over into commercial. But
I love that. I love that. I mean, you've done exactly the opposite that most people do, because most people go out there and they buy a couple of residentials, and then they accumulate and come into commercial. You've just gone foot to the pedal, what do they say, foot to the pedal, and gone straight into commercial, and then you've gone into residential, which is great. I think that's so. The residential property that you bought, is that owner occupied or is that investment property?
No, it's investment. I rent where I live, so I'm a rent tester. Because to me, like, even where I live right now, like, I'm in a home office right now, the cost on rent here versus what I would pay on interest only alone on this place, I'm saving a bunch of money, like, financially. The only difference is I now have a young family. So we probably will in the next 5 years or so actually buy a place to live in. I used to think I would rent for my entire life until I had kids and realized that maybe there's more to it than just numbers. But from a financial standpoint, no matter how you run it, buying your own property to live in just does not make financial sense compared to renting. But, from an investment, like what I mean by that is taking that same money and deploying that to an investment property will yield you better returns. You pay the rent than if you actually paid that in principal and interest for a non-tax deductible investment. So that's kind of my journey. That's where I'm at. So I've got the commercial property, I've got a residential property. The residential perfect. It was perfect timing, perfect storm. Over in Western Australia, we've had this huge boom in pricing. And so it's had a huge capital growth on it, which has been amazing. Whereas the commercial hasn't had that same, well, it's harder to tell what the capital growth has been because it's harder to get a reval on a commercial property as it is resi, but it's had steady growth on rent, right? Yeah. It's just a steady cash flow. It's put cash in my pockets every single month and every single year versus the residential that something pops up. Oh, this thing's broken. Oh, we need to send someone out to look at this. Oh, we got to look at that. Oh, we got to look at that. You know,
commercial just takes over.
The commercial is seamless. Yeah.
Now, tell us a little bit about the commercial. Let's go down the journey of the commercial, how you went about it. You used a buyer's agent for the commercial property. How many properties did you see and what made you choose the property? And tell us a little bit about the property. Is it industrial? Is it retail? Is it large format? What is it?
Yeah, it's a warehouse. So I think we're coming out of COVID now. I've lost track, but it was October 2021. Purchase date was 26th of October 2021. And
you even remember the date.
Well, I actually happen to have the spreadsheet right in front of me, so it's easy for me to tell you that. But yeah, so that was the purchase date, and it was bought in Queensland, and I live in New South Wales. So I've never, still to this date, I've never seen the property. I've never been there. I used a buyer's agent to buy it, and it was actually the first deal that they put in front of us. And as the buyer's agent said to me at the time, like, the tenant that was in there was pretty, I don't want to call rubbish, but it was just not a great tenant because of the quality of what I was buying. Like, so the purchase price on this was 470,000, and so it was on the lower side of where I would now if I was getting in my next commercial, right? Like, but it was me dipping my toe. You got to remember, this is me dipping my toe into property for the first time in decades. I was really unsure about this. And so I trusted the buyer's agent with what they put forward. So I took the first deal that came along. In hindsight, was that smart move? I don't know, but like, I'm happy it's worked out with what we've got. The numbers still have returned very fine on that property. But yeah, the worst experience I had though with buying the property, and I will get to your question of what kind of property is it. The worst experience was actually once it moved into due diligence and dealing with lawyers. I found that the experience there of all of a sudden, as someone who'd never done any property before, all of a sudden I'm now trying to deal with these lawyers who are asking me these questions, and I'm like, I don't have a clue. And I didn't have the experience of a buyer's agent guiding me through that. Whereas I used this different buyer's agent for my residential property, and it was a completely different experience of they took care of so much of the process. It was just so simple. Like, I didn't have to do anything until they said, oh, there's something in your email, check it and sign it. And so it was a very chalk and cheese experience that was disappointing, in terms of how that buyer's agent went. And thankfully, for anyone listening, that buyer's agent was not Mish. So this is not. I'm not saying she was a bad experience.
Thank you, Carl. Thank you for mentioning that. Because I must say, due diligence is. I've always made a big noise about due diligence, so much so that this is just a little bit of a punt. I've actually written a book on due diligence in commercial. So if anybody's interested, go to my website, www.revolvecommercial.com.au, download the book. It's really well worth it. There's over 1,000 points of due diligence in there. And interesting you're saying that, Carl, because I always say in commercial, there are two areas that are going to hurt you when you're doing a commercial deal. Number one, legal due diligence. And number two, finance. So you've just mentioned one. I would love to go into your journey of finance, how that went.
Well, let me first tell you what kind of property it is. It's a warehouse. It's because coming out of COVID, I was like, there's no, I'm a techie. I remote worked and did meetings on Zoom for over 10 years before everyone else did with COVID, right? Like COVID, all of a sudden people like talking about Zoom. It's like, I've been using Zoom and Slack and these tools remotely working for like forever. Yeah. And so I was like, there's no way I'm investing in offices. Like, I was like, this is just crazy. Offices just don't make sense. Retail was nervous for me. I didn't like that. Whereas warehousing made sense. Online businesses, storage, it just made sense to do warehousing to me. So that's the route that I went down. In terms
what happened to the junkie tenant? Did you get rid of the junkie tenant?
No, they stayed for I think it was 2 years. I think they might have stayed for 2 years, and then at the end of their lease, they jumped out. And that was a good experience. Well, it was a good experience in that I got to experience what most people fear when it comes to commercial is how long it stays unoccupied. And it was longer than I would have liked.
So how was that period?
3 months.
3 months. Okay,
that's pretty short. Like in the grand scheme of things, it's actually pretty short.
Yeah,
but like
it's
for
very
me,
short.
I was going like, oh, this is not great.
Yeah.
But one of the benefits of the specific property that I've got there is it's ideal for people who are starting up businesses. It's kind of, which is where it makes it hard. It means that the tenants will often outgrow it. So it's not like, hey, I'll get someone in there who'll be there for 10 years. It's unlikely. Although my current tenant is actually the person who has the place next door. They've just moved in and taken over. So that means I'll probably have a lot more stability now because they're actually expanded from where they've already been for quite a while. Right. But before that, my expectation was that every 2 years or so, I would be looking for a new tenant. And so it was good to experience fairly early into the journey. Okay, well, yes, I didn't have a tenant for a period of time, but it wasn't so bad. I'm lucky that my financing, I was able to get offset accounts with my commercial loan. So I had a lot of money in offset, which meant that what I was paying for those 3 months was actually quite low because I had a bunch of cash sitting in offset anyway. So those 3 months weren't financially painful for me anyway. Going to your question of finance, that would be the number one thing that if I could redo it, I would have. Being new to property, being new to this concept of even commercial property, I just reached out to my networks and I had someone who said, oh yeah, I know, I've got a guy who does commercial, he's like, I do commercial lending. And so I spoke to this guy and I actually spoke to 2 different people, but I ended up going with this other guy. And in hindsight, he didn't have access to the proper books. He didn't really understand. Like he made a mistake. He put me on principal and interest when I very clearly was looking for interest only as an investment in general. Like I would always earn interest only. So I was like, why did you even think I wanted to do P&I? To be fair, what he did do well is he managed to get me to do it with an 80% LVR. He managed to get a lender who would come to me with that for the lower purchase. But my interest rate was higher. What
interest rates were you paying at 80%? Do you remember?
I think it was 6 point something percent
and
at the time.
going back to 2021. So 6 point something must have been a second tier lender, and it would have been pretty high in 2021 because most of the rates at that time
it was high,
about 2.53%.
Yeah, it was high.
So he was just making sure that you got the deal over the line, which is one of the strategies in commercial. But yeah, I think you're right. You could have done better with the right professional holding your hand in finance.
I 100% agree. Like the financial, again, as I said, this is my first experience in property. And so then when I bought my residential property and I had a very specific investor-focused residential mortgage professional, and what they were able to do for me on the residential front side really opened my eyes to what would have happened had I truly had someone who just all day, every day did commercial lending for investors, for various sizes, like the big end of town and the smaller end of town. Yeah. And so that's definitely been one of the biggest eye openers of, I would really encourage anyone who goes into commercial, do not go and just grab your local mortgage broker, because they might say, oh, I can do commercial lending, no problem. But I think this is a conversation you and I had. Like they might have access to maybe 3 or 4 lenders. Like how many of these deals take forever? Like to share another nightmare, I've been trying to refinance my commercial property. I started with a broker July last year. So that's 2024. July 2024, we started the process.
Yep.
That particular broker I was working with, all of a sudden she left the company I was dealing with. And the deal, we were maybe 6 months into the deal and it still hadn't happened. And she just disappeared.
This was refinancing.
This is refinancing.
This is refinancing. So you own the business, you own the property, and you're refinancing the same building, and it's taking you 6 months.
Take me 6 months.
Yeah.
Horrible.
That is really a very good example of making sure that you use the right professional. And I think what Carl's really bringing to the forefront here is you'll hear me saying this all the time, and a lot of people poo-poo it. I've actually got to a stage where I say to people, you know what, if you want to use your own finance broker, go for it, but I'm not going to deal with you. Because I know that deals fall over on either finance or legal. It's just use the right people, use the right professionals, to get the deal done. So Carl, did you finally get the refinancing on the building?
No, a new broker stepped in to take over. And I think it was around the time the new broker was coming on board just when you and I were first meeting. And so she took over and there was a bunch of stuff. My accountant had done something a bit stupid. They made a mistake when they lodged their tax returns. And so once we got all that stuff back to the accountant to fix the problems, and he's since fixed those problems, that particular lender said, no, there's been too many changes since the original application. We're out. The risk feels too high for us. And so they opted out. And so then, to the credit, this person, she shopped around, she tried to do her best, but she just couldn't find a deal that made sense from what I was already on. She couldn't get me a better interest rate. She couldn't get me interest only with a good period. She couldn't get me offset accounts. Like, she just couldn't meet what I was looking for to be better what I was already on. So she said, look, I just can't do it.
So what have you done?
At the moment, I'm still with my existing. And the thing is, I was doing the refinance for a few reasons. One, I wanted to access some of the equity and to do a reval of the property. But I ultimately just decided, like, after almost a year, right? Like after months of working on this, I just like, you know what? I'll just stick with what I got for now. I'll continue to do it, and I'll revisit this when I've got headspace to visit it.
So guys, this is very unusual that I'm going to do right now for Carl. I don't do this for very many people because our resources are very, very precious. But Carl, I'm going to help you. I'm going to help you in a big way. We haven't had this conversation. So for any listeners that are hearing this, this is the first time Carl's hearing this. I'm going to be introducing you to my best kept secret in commercial real estate, who's going to help you. Probably within 2 to 3 months, you're going to be out of this jam.
Okay. That would be amazing. I would love that. Thank you.
I was going to keep that for after the show to tell you, but seeing that we're doing that, I'd really like to see you solving this problem and getting out of the situation that you're in right now. So for sure,
that would be amazing. Thank you.
Yeah. So tell me about the new tenants that you've got in your property now. Are they good, solid tenants? They're paying their rent. You have no problems. And who's managing the property?
So I got a property manager, a friend of mine. He does property management. He doesn't do a lot of commercial, so I am aware that it's a bit different. He mostly does residential, but yeah, he's taken on the commercial. He and his team. He's got quite a large team here in Australia. So they manage it quite well. It's been fairly hands off for me. As I said, commercial has been the most hands off. Like, I very rarely have had anything. Like, sometimes there'll be a strata thing that's come through and I get tagged in that. But outside of that, compared to the residential, like, I get pinged for that on a far more regular basis. Oh, there's this new thing. Oh, check out this photo. Do you approve sending a maintenance person to do this? Do you approve that? The only thing that we've recently done on the commercial property is the new tenant wanted to install some air conditioning and was wondering whether I'd be willing to go in on that with them rather than them doing the whole thing themselves. So we had a bit of conversation around that. But other than that, it's been very just they do their thing, and especially interested because this is an expanding tenant from the place next door choosing to move into our warehouse. Yep. I do see probably a stronger, longer term tenant, which I think is quite encouraging, versus what was happening before that is we went through a few tenants where they'd come for their period of time, and then usually it was either two reasons: their business didn't succeed, so they went out of business, or their business expanded that we were too small for them and they needed to upgrade to a bigger space.
And that's actually one of the downsides of smaller warehouses, because you find that you have those exact two problems, is that either the businesses don't survive or they need additional space. And to be quite honest with you, the situation that you have right now is probably the best. For having that your neighbor has expanded into your unit. You find that there's often those are the ones that give you longevity, far more longevity in small units.
Yeah, you know, so it was unexpected. Like, we were actively searching for new tenants, and then it actually turned out that the tenant we had in there before that, there was some law change or something changed. She because we're near the airport up in Brisbane, and so she was doing something at the airport, and the airport all of a sudden said, no, you can't do that anymore at the airport. So she was then doing it back at the warehouse, and then the strata of where we were decided that what she was doing was too risky to be done in the warehouse. And so she's like, well, I can't do my job at the airport. I can't do my job here. I can't stay here. So she was in a really tough situation. She's like, I can't do my job. Yes. And so here's one of the good things as an investor, though, in a commercial, is it was her responsibility to find a new tenant or find a solution. And I guess it was probably her potentially having the conversation with the people next door that actually then ended up planting the seed. We didn't have to go and search them. They hit us up and said, hey, actually, could we take over the lease? Could we move in? So it worked out really, really well. I'm
loving this conversation. You're articulating, you're bringing up a couple of points that we often talk about when you have vacant properties. So I'm gonna just take a little segue over here into vacant properties, because what you went through is exactly what you need to do when you have vacant properties, is go door knocking. Because you find that 90% of the times you'll find a solution from one of your neighbors. you'll find that somebody is saying, they're thinking of moving out, but it's such a huge expense to move out. In commercial, it could be anything upwards of 50 to 100,000 to move a commercial, a business out of a commercial premises. And often all they need is just storage for distribution or something like that. And you might have that property ready and waiting, and you're solving their problem. So for those of you who are always thinking about vacancies, Carl has just given you 101 of how to mitigate vacancies without knowing that he's doing it here.
Yeah, I didn't even have to do anything. That was the cool thing. They came to me. My tenant effectively probably did it for me. But yeah, I agree. Like, I now know if I have a big vacancy like that, it would be tell the person responsible, go knock on the doors and find someone. For
sure. Absolutely. Okay. So looking at things right now, I mean, we were going to talk about red flags, and I think you've brought up quite a lot of red flags. What you've been through, it was quite a journey. Where to from here? I mean, you've got the residential in Perth, and that's doing great. And I take it that the yield has grown substantially in Perth. So otherwise you're looking at keeping residential or moving that on. What's what you're thinking with regards to residential?
Yeah, I'm always generally of it. Like, I will not keep an underperforming asset, or if there's a better opportunity. But to me, one of the things that the fallacies in particular in residential real estate, I mean, it's all real estate, but residential in particular, to me, is people go like, oh, I buy a property and then I sell it. And it's like, but the costs of doing that, yeah, you might have made a couple of 100,000, who knows how much in capital growth, but then your cost to actually sell can eat into so much of that once you take into tax into consideration, once you take the purchase cost, the advertise, all of that. So now all of a sudden, you think you made hundreds of thousands, but you've just eaten most of that growth anyway. Yeah. So I'm more of a buy and hold. If I choose to, I'd be refinancing to access the equity in that property rather than actually. And that's the one thing I will say, that residential, it is so much easier to do a refinance, so much easier to get a reval. You can online just do a desktop valuation. Like, it's just so much easier. That's the one thing I wish commercial was a bit easier to do. But to me, it's continuing to hold it. If I see that it stays flat, like it started to flatten out now, we had this huge growth. It started to flatten out. If the flatten out stays flat for too long, I might then look at whether those costs are worth spending to redeploy. But for me at the moment, it makes sense to just access it through refinance and then redeploy. So I'm focused now on getting enough of a deposit to be able to go into a more $3 million plus commercial. Like, my biggest learning from this has been, if I was doing it again and I had the knowledge that I have now, I would have probably pulled the trigger on a, around that $2 to $3 million commercial property as the first go-to, rather than what I did do. Okay. I'm grateful for it because it's what got me into property in the first place. Without that commercial property, I wouldn't even been in property. It's still been even with all those red flags, it's still been a great financial investment. I'm happy with it. But yeah, to me, the cash flow returns, the things I want to get, the things that I know that I'm sure you teach and take your people through, at the smaller end of town, you don't have as much levers to pull to increase growth. Whereas on the bigger end of town, you've got more things you can do to increase your income, to increase the value of the property faster than you can a small property.
Yeah, and also, I mean, at the bigger end of town, you've got a lot more cash flows that's going through, and you've got a lot of cash flow, equity in the property, growth in the property. You've got a lot more opportunity in the property. So you've hit it spot on. A lot of people that I speak to, I often say to them, if they've got the ability to buy big first, then do it. However, it's almost like a huge, big spear. It's the hairy spider, because if you don't understand commercial, you can't see the benefit of what I'm trying to explain to you. So it's great that you've been through that. You've been through that experience, and you can see it now in hindsight. I think I should bring you in on a couple of my sales calls so that you can speak to the guys and tell them about your experience. That's really amazing. Tell us a little bit about the cash flow. You bought this property in 2021, and I'm assuming you bought it at a pretty good rate, so you were already earning cash flow out of it. Has that increased? Have you got a better cash flow out of it now? Is the property performing very well now? Is it something that, it's a hold and keep?
Yeah, it's definitely a hold and keep, for at least for the now. I can imagine as more properties get added, at the higher end of town, then we'd probably start to trim off these smaller performing properties. But at the moment, it just makes sense to hold it. pending refinance options too, to see, because that's the one thing, like I've got forecasts of what I believe the current value is right now, but I haven't actually got an official current val because I haven't paid for a valuer unless I'm going to do it through a finance company, you know?
Give us a little snippet. So you bought the property for about 400,000. What do you think the property's worth at the moment?
I think it's worth probably around 550. It could be more than that, but like I conservatively look at it being probably around the 550 mark. I bought it for 470. My purchase price was 470. The actual property price I think was I could tell you 430.
430. Okay. So that's pretty good. And yeah, you're probably right. It's probably worth a little bit more than about 550 for the period of time that you bought it, when you bought it, and what's happened to the properties in that area in particular. I mean, that's good to be conservative about that. But we can discuss that when I introduce you to my golden gem.
Well, sounds good. Yeah, but in terms of cash flow, one of the best things, like if you can do it, I don't know if this flies in the face of what you say, but like in my experience has been, if you can do it and you can get an offset account to go with your commercial property and you've got extra cash flow, that's one thing that has made the cash flow coming from this property has been huge, because we can store, when the business has excess cash, it can store that money and it can hold that money to offset the interest being paid. And therefore, all of a sudden now it's in a more, especially on an interest only loan, you're now in a more cash flow positive situation. And so even if I took all that money out, we are still cash flow positive, thankfully, because of how long we've held it, the LVR, all those things. But even if I wasn't, even in the beginning, I know when interest rates really started to start going up here in Australia, right? At first it was like, oh, this is probably not going to be cash flow positive anymore. But because I had so much money in offset against it, it was like I didn't actually have to worry about that. Even if the interest rates going up would have changed those numbers, and I don't know if that was true. Yeah. That was the thought and the fear I had, though. But because I had money in offset, it was like, actually, this continues to stay very healthy, very strong, positive cash flow, covers all its costs. And that's, again, like I'm sure you've said this before, but in the residential, you know, the rent that I'm receiving is trying to pay the property manager fees. It's paying everything, all those things. With commercial, the tenant is paying the property manager fees. Yeah. The tenant is paying everything, right? Yeah. And so the only thing is potentially those fit outs or those things that you might agree with the tenant to lure them or get to keep them happy that you might do. But otherwise, everything's being covered by the tenant, you know? And
I don't know whether you did this or whether your property managers helped you out here, but I'm just gonna throw you another little gold nugget. When you're negotiating things like fit outs and additional air cons and that, you can always negotiate with your tenant that, yep, sure, I'll pay for this up front. Let's say it's a $5,000 air con that you're putting in. However, I'm going to add a percentage of that to your rental for the next 12 or 24 months. And you find 9 times out of 10, the tenant's very happy to do that. So they're happy to have their rates slightly increased because they don't have the burden of having the $5,000 output. You know, so there are different ways, and again, commercially you can negotiate those kind of things. Obviously, residential you can't do that, and it's all about achieving a win-win for everybody involved. They want air cons, yes, they can have, so you know, so long as you're getting your and plus you're getting a capital depreciation on it, you know, and hell, if the tenant's paying for it, happy days, you know, they're adding value. And for every $1 you're adding to your rental, what happens to the value of the property? Goes up, you know, it adds exponentially. So, but anyway.
I wish we had done that. I wish we had said, hey, let's put up your rent just by a small amount to cover that. We didn't do that. We ended up doing a 50-50. We're splitting the cost of the aircon. So I get some of the depreciation. But I wish I had said, like, you know what, I'll pay the whole thing, but I'll put up your rent. That would have been a smarter play.
Yeah, well, you know, these are little tricks and nuances that people don't know. And yeah, Kyle, we should have been talking about this ages ago. We should have been talking about this months ago when this came up. Anyway, we will be having these conversations in the future. So I love the journey that you've been on, and the way that you've done things, and being in business, the way that you think about property and the way that you think about business, property, residential, all of that. This has really been amazing. Let's say, what would you say to yourself in 2020, 2021? What would the advice be that you'd be giving to yourself way back there without knowing?
I think like anytime something's new, whether that's you've been doing residential property and now you're looking at commercial and it's different and you don't know it. Anytime you've got something new, those nervousness of what ifs are going to come up. And you got to remember, when I was doing this was an unsettling time. We'd just gone through COVID. I'd actually been in the 5-month lockdown in Melbourne before coming up to New South Wales again. Like, so it had been a very uncertain period of time. And so the advice I would give is just, definitely use a buyer's agent. And had I known you, Mish, at the time, you would 100% be my first choice. Hand on heart would say that. But I didn't know you at the time. And what I would say though, if you are someone like me who you've spent the last decade or more, like for me, it's been almost 3 decades, but like if you've been spent a number of time investing in becoming an expert at something like business and real estate is not your thing, don't try and become an expert. Hire the expert. Hire someone like Mish who has spent their decades learning and mastering this, because little simple things she just rattled off the top of her head just then, like that's the difference of hundreds of thousands of dollars in property value that it's just a no-brainer to her. Just like I could probably say something about business that would be like mind-blowing for you, but it's just a no-brainer to me. And so I would just say is lean on those experts, find the right people, and don't be afraid to do the deal. And yeah, as I've already alluded, I would have gone bigger had I understood and not been as scared of I don't know what property is to me. I would have tried to go in at least $1 million plus. Like in hindsight, 3 million plus, but like I would have been at least going, let's give them $1 million plus commercial property.
It's amazing. It's really, really amazing. And there are 1,000 thoughts going through my head as you're saying that. A lot of people ask me, is now a good time to buy property? And if I think back to the 35 years that I've been buying property, I have bought properties at the top of the market. I've bought properties at the low end of the market, in between. I've bought property. I don't care. I buy properties because I see the property, I see the potential in it, and I know that the market's going to grow. Doesn't matter where it is. There's more population coming into the country. There's population growth. There's demand. And especially in Australia, we're such a fresh nation. We're such a growing nation that it's inevitable that your properties are going to grow in value. It doesn't matter where, so long as you're buying good, solid assets in good capital growth areas, you can't go wrong over that period of time. I love what you said there about that in hindsight, you would have wanted to go bigger earlier. I think that a lot of people, they get stuck in that little trench, but it's good that you've been through the journey. And I think, for people to start there, dip your toe in, feel what it's like. It's a very different journey. And sharing what you've been through today, I really, really value that. And I want to say thank you. Thank you. Thank you. Carl, just a quick thing. Now, just to give you a little bit of a punt here, tell me a little bit about your business. What do you do and what is your ideal client?
Oh, well, I have, at the end of the day, what I do is I help people work less and get the freedom that they went into business for in the first place. That's really what I do. And I do that through a couple of key ways. One, I have a company, it just turned 11 on Monday. Today, it's a Wednesday, we're recording this. And so on Monday, it turned 11 years old. It's called Automation Agency. We're a flat rate monthly fee that you invest in that gives you access to a whole team of marketers who can help you automate your business, do your graphic design, build your web pages, send out your email automations, do all that. So it's a team. If you don't want to hire and build your own team, that could be you're an agency, it could be you're a solopreneur, you could be a small marketing team. That's who we serve and have done for over a decade now. And then I also have something that's a bit new. If you're a dad in business, I have a program called Dadpreneur where I mentor me, and also there's a health and fitness trainer in the program. And basically we mentor and connect with other dads who run their own business. Because being a dad in business, there's a lot of stuff for men in business and business owners in general. But once you become a parent, things are different. And there's something beautiful about men coming together, being able to have a safe space to talk about the challenges of business, parenting, relationships. How do you balance it all? Because, the guys who gravitate to Dadpreneur are building a business and they want to build the business to grow and succeed, but they don't want to do it by sacrificing their relationship with their wife and kids. They want to they're doing the business to provide, but they don't want to get so caught up into the business. And they often believe that it's either one or the other. I'm there for my family or I'm growing the business. I can't do both. And that's what we're there to challenge and support people. And then for anyone who's not a dad and they're like, but I want Carl's brain, I do some private consulting here and there for people on automation, AI implementation, things like that. So that's me, but ultimately you're an entrepreneur and you want more freedom in your business and life.
And Carl, where can people get hold of you? If they want to get hold of you and they love what you're talking about, where can they get hold of you?
Yeah, they can find me on Instagram. I'm Carl Taylo. It's Carl with a C. You can also find me at carltaylor.com. Again, CARLTAYLOR.com.
Great. And we'll put Carl's details in the show notes. And again, Carl, thank you so much. I know your time's very valuable. You're a very busy guy trying to get you to do this. I really appreciate it. Thank you so much. And thank you to the audience for listening. If you guys want to get hold of Carl, have a look in the show notes. And until next time, thank you very much.
Thank you.